Welcome to BookBriefing, your ultimate destination where we decode the profound essence of investing through timeless literature. Today, we conquer Ray Dalio's legendary masterpiece, Principles, written by the founder of Bridgewater Associates. On the blackboard behind me, you can see the 8-step roadmap of the brief map model. We will walk through book, reality, and insight to master human ego and cognitive blind spots. Then, we navigate economy and finance, exploring macroeconomic gravity and the famous all-weather portfolio strategy. Finally, we establish mindset, action, and perspective. By equipping your mind with this powerful analytical framework, you will transform theoretical knowledge into an indispensable survival weapon in real-world markets. Let us dive into the universal rules of evolution established over a lifetime of trial and error. Author Ray Dalio is a mechanic-like investment titan who leads Bridgewater Associates, the world's largest hedge fund managing over $160 billion in assets. He revolutionized organizational management by embedding radical transparency and idea meritocracy into every decision. Looking at the lifetime of Principles flow on the right side of the slide, you can understand his core philosophy. Dalio explains that a human life naturally moves through 3 distinct phases, starting in dependency where we seek wisdom from mentors, progressing to individual success where we achieve goals by discovering our own rules, and culminating in helping others succeed. Dalio chose to publish his 40 years of accumulated algorithms and painful lessons precisely to fulfill this final stage of social contribution, empowering the next generation of investors to build their own independent systems. The foundational pillar supporting Ray Dalio's philosophy is a radical worldview transformation, seeing yourself and the market as a complex, highly precise machine operating through strict cause-and-effect relationships. To operate this machine effectively, Dalio formulated a 5-step loop for personal and financial evolution. First, set clear and ambitious goals. Second, confront the inevitable problems and obstacles blocking your path. Third, transparently diagnose the root causes without an ounce of emotional ego or denial. Fourth, design explicit mechanical rules and systems to systematically bypass these flaws. Fifth, do and execute the algorithm with the discipline of an unyielding computer. By continuously iterating through this 5-step loop, you can continuously repair your internal flaws and achieve absolute financial independence. Throughout market history, the primary reason why countless investors face catastrophic account blowups is their inability to overcome the ego barrier and blind spot barrier. Historically, economic disasters following major crises like the 1937 Great Depression were fueled by reckless currency creation, zero interest rates, and structural tightening amidst extreme wealth inequality. Modern investors repeatedly misread these macro-cycle expansions and contractions, recklessly taking on leverage at the tail end of long-term debt cycles. Trapped in the ego barrier, stubbornly insisting that their subjective analysis is right while the market is wrong, or blinded by the blind spot barrier that filters out opposing counter-arguments, they end up forced into liquidation. To survive financial storms, shattering these psychological barriers is non-negotiable. Through crushing market losses and emotional turmoil, Ray Dalio discovered a timeless formula for extraordinary personal and financial growth: pain plus reflection equals progress. When facing the bitter pain of market crashes, bad trades, or impulsive mistakes, staring directly at reality without making excuses is the true starting point of evolution. Instead of sinking into unproductive self-blame, you must record every detail of the trade and objectively reflect on which broken component of your decision-making machine malfunctioned. When you dissect your mistakes as objective, dispassionate data points, you permanently block the path to repeating identical errors. This reflective process installs an automatic progress operating system into your machine, ensuring consistent compound returns in future market cycles. In the vast universe of macroeconomics, individual stocks and assets orbit within a powerful gravitational field generated by debt cycles. Central bank credit expansion and unbacked fiat money creation steadily erode purchasing power, inevitably triggering severe inflation and currency devaluation. This economic gravity operates through short-term debt cycles lasting 5 to 8 years, and massive long-term debt cycles spanning 75 to 100 years. 5 fundamental macro forces interact simultaneously: debt dynamics, internal wealth polarization, geopolitical conflict between major powers, natural climate shocks, and revolutionary technological breakthroughs like AI. Investors who fail to recognize shifts in these macro gravity fields will find their purchasing power silently melting away, caught unaware in the crushing tide of currency debasement. To protect capital against macroeconomic tempests, Ray Dalio engineered the ultimate financial vessel, the all-weather portfolio. Markets naturally fluctuate across a 4-season matrix defined by economic growth and inflation expectations. Equities and commodities thrive during unexpected growth, gold and inflation-linked bonds protect capital during high inflation, government bonds outperform during economic slowdowns, and equities paired with bonds defend during disinflation. The defining breakthrough of the all-weather model is risk parity, balancing risk volatility equally across assets rather than allocating dollar amounts. By reducing volatile equity weightings to 30% and allocating 55% to stable bonds and 15% to crisis hedges, the portfolio minimizes maximum drawdown (MDD), securing steady compound growth through any harsh economic winter. The silent enemy distorting our investment decisions is the human ego and amygdala, operating like a primitive blue brain bound by emotional chains. When market signals or opposing perspectives contradict our personal beliefs, amygdala hijacking occurs, misinterpreting constructive feedback as a physical threat. To overcome this primitive instinct and survive in real-world trading, investors must activate 2 core mindsets like a brightly illuminated brain. First, radical truthfulness, laying out your actual thoughts, mistakes, and limitations on the table without pretense. Second, radical open-mindedness, actively seeking out and embracing harsh criticisms from independent, capable thinkers to shatter cognitive blind spots. Fusing these 2 principles liberates your decision-making process from emotional bias. The most sophisticated framework for organizational and investment decision-making is an idea meritocracy, designed to completely filter out emotional bias. Bridgewater firmly rejects autocratic regimes that rely on a single leader's gut feeling, as well as democratic systems that compromise through equal one-person one-vote rules among non-experts. Instead, it ensures that only the most logically sound ideas triumph. The core mechanism driving this system is believability-weighted decision-making. Opinions are weighted based on each individual's proven track record of success, and critical decisions are cross-analyzed through rigorous triangulation among at least 3 experts. By systematically encouraging thoughtful disagreement, it eliminates subjective ego and yields optimal data-driven investment decisions. In the action stage of investing, Ray Dalio views mistakes not as humiliating failures, but as invaluable data required for systematic growth. When a trade goes wrong, wasting emotional energy on guilt is strictly prohibited. Instead, you must log every flaw in your decision criteria inside a structured error log. Furthermore, you must not rely solely on temporary mental resolutions. You must execute decision computerization, transforming your qualitative trading criteria into precise mathematical formulas entered into an automated system. Operating like a real-time GPS navigation unit, this computerized algorithm runs in parallel with your human judgment, systematically overriding impulsive, emotion-driven panic trading and maintaining disciplined risk controls. From a long-term perspective, the master law governing financial markets is the paradigm shift, where basic investment rules flip completely roughly once every decade. Most market participants fall into the dangerous trap of assuming that the high-performing asset classes of the past 10 years will continue dominating indefinitely, riding crowded trades straight into market tops. Ray Dalio highlights that during structural paradigm shifts, characterized by negative real interest rates, aggressive debt monetization, and escalating geopolitical friction, allocating safe haven assets like gold becomes essential. Furthermore, by combining 15 or more uncorrelated, independent return streams, you build the holy grail of investing, reducing portfolio downside risk by over 80% without sacrificing long-term expected returns. This brings us to the final summary penetrating Ray Dalio's principles. First, train yourself relentlessly to view yourself and the market through the objective lens of a machine and systematic framework, rather than your personal ego. Second, never evade the pain of market failure, embrace reflection to evolve your personal investment algorithm. Third, adopt radical open-mindedness to destroy cognitive blind spots, systematically incorporating believable perspectives. Fourth, respect macroeconomic gravity like debt cycles and shelter your wealth inside an all-weather portfolio arc. If you want to arm your trading system with the timeless principles from this book, visit bookbriefing.com today to explore our precision investment data tables and interactive practical tools.